Welcome back, everybody, to Andy the Banker Show. Today's topic is going to be about gold, and not just gold being at all time highs. We're also going to be discussing one of my biggest holdings, which is Costco. And Costco is going to have their earnings report this upcoming September the 26th. We'll talk a little bit about that. Let's get it started with gold. If you could look at the gold ETF here, SPDR Gold Trust, currently gold is trading at an all-time high, as you can see here, around $242. Now, the last times that gold has usually spiked up was around 2008, 2009 during the financial crisis. We usually had another one close to COVID, actually, where we had another spike in prices right before COVID. And then now again, we're having the prices spike up. Now, if history starts rhyming and we start having another negative reaction in the stock market, my reaction would be to actually buy more stocks. The reason for that is because I have decades to keep on investing, you guys. I'm still a Gen Z. I have years before retirement, decades even. So let's say there is a crash, we have another 20%, 30% down in the market. That means for the next 40 years, I am able to buy these appreciating assets, these compounders, for such a low price. Whereas if I were to buy them now, where they're trading at pretty high levels, almost at all time highs, I'm not getting the best deals on them, right? Of course, I am still going to be buying no matter what, just because I dollar cost average. And when you're dollar cost averaging, you buy whether the stocks go down or up. Now, one of the interesting about things about gold, I like to think about gold as if it's something that helps you preserve your wealth. If we look at the price of gold here around 2012, it's around $171. Around about 10 years later, it's very close to the price that it was, right? Very similar prices. To me, gold is something that it's very good for preserving, but I don't consider it as something that I is used to build my wealth. Now, the last 5 years, it has actually built your wealth considerably well, 71%. But just overall, looking at the price of gold, it hedges pretty well with the price of inflation. But for me, it's just something that I don't consider as a wealth builder. Now, if I am trying to build my wealth, that is where I would go with my individual stock picks. Now, when it comes to my stock picks here, we got Costco earnings coming up. Now, Costco is one of those companies that is a big chunk of my portfolio. If we look at here in this particular portfolio, it's about 36%. My average cost is in Costco is around $598. Market value is 21,000. Now, out of that $21,000, 7,300 is purely in gains. That's just amazing. I think this is one of my best returns in this particular portfolio. I've been investing. This portfolio is about 2 years old, so in just about 2 years, went up 51%. And I can't complain about that. One of the issues that a lot of people do have with Costco, however, is its current PE ratio. All right. It's around trading around a 55 PE ratio. When I was buying into Costco, they were around 40 PE ratio. Still expensive, but not close to the 55 range. All right. And it's going to be reporting their earnings on September 26th. I am a little bit scared for that September 26th. All right. I have a feeling we could have a downward movement on the stock. Now, why is that? Is because the past few months we've been having a lot of these recession fears, and because Costco has these recession fears, it's one of those companies that's done well during the past few recessions. Like 2008, still was able to make money. 2020, still able to make money. So as a result, the past few months, you can especially see like maybe 1 year chart, 60% up in a single year. I mean, this is one of those stocks that people rush towards, because if there's another recession, it's like they investors believe that this is a company that will be able to do well during those times. And if we look at their revenue charts, all right, this is the revenue chart for Costco from 2009 to present day. And you look at this chart, it's a nice, predictable straight line. right? There isn't any single year that's like too crazy outperforming, and there isn't a year that where it's like really underperforming. It's a very predictable company, and that's one of the reasons why I buy into this company. It has such a predictable earnings report that I just love it. Like, doesn't matter what type of time period we have, 2020 or 2008, it is able to just continuously compound over time. Now, when you look at their cash flows, however, their cash flows present a little bit of a different picture. All right, so same thing starting from 2009. Their cash flows, there are a couple years where it's down. And I want to talk about these two particular years, all right, 2022 and 2021, where they actually had negative cash flows. And you might be wondering, like, hey, what happened during these two particular time? Now, they were still profitable during these 2 years. However, their cash flows did go down. And what essentially happened during these two eras was high inflation. So with Costco during these 2 years, inflation was highly increasing 2021, 2022. And what they ended up doing, they did pass along some of those costs to their customers, but a big chunk of them, they actually ate those costs up internally. And not only that, these 2 years were the years that they actually were expanding internationally. So one of the things about Costco stores is that when they do get into new stores, they actually buy the land itself. They buy the whole property. They don't lease it like other companies like the Targets or the Walmart. They typically actually just buy it. So what to do that, it requires a ton of cash. And as a result, these two particular years, they were down. Uh, However, we look at the long term assets of Costco, right? Long term assets, man, it's another chart I just love to see, right? It's able to just continuously build up their assets, their cash on hand, year over year. I am still gonna be invested in Costco. Right? And here's my main thesis for Costco. Costco is one of those companies that we look at the max chart here. During 2008, it didn't fall off a cliff like a lot of other companies did. During 2020, it was able to increase their revenues during 2020 and not suffer. So because it's a company that's able to do well during good economic time periods and also do good during bad economic periods, like during recessions, it's a company that I'm willing to pay a premium for that type of specialty. What happens is that even during recession time periods, Costco is one of those companies that people are still going to shop at because they offer the greatest value for their consumers. Right? One of the things I love about shopping at Costco as a consumer is that when I'm going to Costco, I know that Costco has the same mentality that I have, which is I'm trying to buy things as cheap as possible, and Costco's trying to sell them as cheap as possible to me because their main source of the revenue, main source of making money for Costco is through their memberships itself. Right. So typically, an average margins for Costco is about 11%, whereas other competitors they could be about 25 to 50%. And the margins that they're making off the customers, that's not what they're really about. The main thing is about this membership. And one thing I love about their memberships is how they're able to keep on retaining those existing customers. Fun fact for you guys, in case you guys did not know, out of 100 customers that sign up for a Costco membership, 93 of them will re-sign for another membership the following year. And that type of retention that's better than Netflix themselves. I just love that type of way that a company makes money. That it's reoccurring, that it's reoccurring revenue, and year over year they're gonna keep on getting those high retention values because like it's like where else are you going to go? Do you want to go to a competitor where that competitor is gonna they're not gonna beat Costco in price? They could, but in general, Costco has the lowest margin. So most customers, they that's the value that they get from Costco. And my personal belief is that because customers are getting so much value off those memberships, it makes it such a great value to keep on re-signing for those memberships. And it's not just the groceries itself; it's the warehouses, it's the other businesses that Costco is getting into, the optical, the pharmacy, all those other aspects. Now, currently, Costco is trading at a 55 PE ratio, and I think to myself, like, man, is this stock gonna have another pullback? One thing that's unique about Costco in this quarter is that although they did increase the membership prices starting in September, those numbers should not be reflecting in this quarterly earning. It will report on the next one in December, but it should not be reporting on this one. As a result, it gives me a little bit hesitancy. It gives me a little bit thought process that Costco could pull back in their valuation. But as even if that does happen, I'm not selling out of it. This is one of those companies that I can see myself holding into Costco for decades to come. I can see myself, I can see it being essentially a lifetime stock for myself that I'll just keep on eventually buying. I used to buy Costco when it was in 330 back in 2021, and it's a company I just been dollar cost averaging into. Now, one aspect I actually wanted to talk about this week is that the stock market has been pushing up and up into all-time highs because of the interest rate cuts that happened a few days ago. Now, what happens in my personal opinion is that if you are somebody that holds cash, right, you have high yield savings account. To me, that's a difficult place to be in. Of course, you got to have some sort of emergency fund, but anything excess of those emergency funds, I can see those rates dropping because not only did it drop a few days ago, it's expected to keep on dropping in November and even December itself. And if it does drop, your existing cash value will go down, and those those now another thing I wanted to talk about this week that happened in the stock market was the rates going down. Now, when rates go down, now another thing I did want to discuss is about the Federal Reserve rate going down 50 basis points. In my personal opinion, I think the worst place that I can have my cash right now is in like a high yield savings account or some sort of cash itself. Because with the yields going down, right? For example, like Robinhood used to give me a 5.5 annual percentage yield, and currently it gives me 4.5. And I can see that rate dropping and dropping each month. The Fed rate, they're gonna meet in November, they're gonna meet in December, and I can see those yields dropping. And what typically does happen when the yields drop is that people have less optionalities. Like when you were getting a 5% yield on your high yield savings account, some people were like, those are good rates. I can go ahead, sell out of my stocks, put it in there, get some passive income through something that's secure, right? That is guaranteed to give me a 5% yield. With the rates going down, however, you're gonna get lower yields, and as a result, this is great for stocks because some of those people will move into stocks. Some of those people will move into bonds. And that's why you see the stocks the past few days, ever since the rate cuts has been announced, that they're rising up because as Warren Buffett said it, interest rates are like a gravity. Like they pull everything else down. When we have a lower interest rate yield, they are typically better for the stock market. And as a result, the next essentially couple months, I'll be putting money in more aggressively than I had been before. Because now the Federal Reserve is our friend. They are trying to push the economy to be more stimulating to the economy. And I'll be utilizing that fully to my advantage. It's actually one of the reasons why I bought into Chipotle. Ever since I bought Chipotle since yesterday, the stock has dropped. However, with the rates going down, it's allowing me to take a little bit more risk into the market. Chipotle is typically not the type of stock that I go into because Chipotle is a little bit more unpredictable than the others. However, because of the amazing value they provide, the prices that they're selling their burritos at around $10 right now, I believe they can increase those prices and increase their cash flow and build more stores. But the story of the main point is that it allows investors to buy a little bit more of a risk on assets. And one more point I wanted to mention about Chipotle was this. Let's say I bought into Chipotle and Chipotle drops 20%, 30% even. I want to share with you my thought process. When I bought into the stock, I told myself that even if Chipotle goes down 20%, 30%, I will still be buying more of this stock. That is not something that's going to falter me from selling the stock because if that is the case, I told myself I would not buy the stock, right? I would only buy the stock that even if the prices fall, I would be buying more of this stock. Now, the only time I can see myself actually selling Chipotle for the short term time being is if for some reason there is new information I found out about Chipotle that dramatically changes my thesis. For example, let's say we found some sort of fraud in their accounting, then yes, that fully changes my outlook on Chipotle. However, if it's just a business slowdown, if it's some other reason, natural reason that the business is falling down, stock price is going down, it allows me to buy the stock for a cheaper price. And I'm going to be buying the stock at a cheaper price because why wouldn't I? If I was buying it at 57, I would buy Chipotle at $30. And with that, you guys, thank you so much for watching this episode, and I will see you on the next one. Thank you.